Kai, thanks very much for joining us. You recently joined Domicil, so just tell us a little bit more about the company and the strategy.
Domicil was founded something like 2009, and it's a medium-sized company headquartered in Munich. In recent years, Domicil was able to win two major German insurance companies, the Versicherungskammer Group and the Bayerische Insurance, as shareholders of the company. Domicil follows two strategic approaches. On one hand, we're dedicated to privatization of residential real estate in the B2C market. Domicil manages the whole privatization process, from the acquisition of real estate up to the after-sales management, including the property and asset management of the sold units. So that is to say, turning private real estate investment into a financial asset without management expenditures for the private client. Besides the privatization, Domicil offers asset and investment management services to third parties. This growing business line now includes several institutional investors, such as PFA, that's a Danish pension fund, one of the biggest pension funds in Europe. For PFA, Domicil acquired both one of the largest residential portfolios in 2018, valued 750 million euros, and one of the biggest micro-living portfolios in Germany in 2020. That was a size of 250 million. To put it together, we combine high-yielding business of privatization with a stable business of offering management services to international investors, which guarantees a stable income and downside protection for our company.
And obviously the residential sector has been a big focus for investors. So how do you see the residential markets there in Germany?
The German residential market was in former times and also during the pandemic one of the most stable situations that you can invest in. It was something of boring in the times when everyone was talking about high yields and high returns. You couldn't get that with residential, but the stability lasts throughout the years, and so it is now still the same. And in contrast to other countries, Germany, as a federal organized state, doesn't have just only one or two hubs like Berlin or Hamburg or Munich. So the regional prosperous areas, these are the areas where we think the most values are and where the most profit can be made. As German residential market is highly regulated, this is something that is also different mostly to other countries. It is very stable but regulated. In comparison to European countries, you find attractive risk-return profiles in the regional areas, as I just mentioned, and you don't have just to go to Berlin or other cities like that everyone knows all over the world. And especially in the privatization areas, as the regulations tend to be stronger and getting more and more. In the regional areas, you still do have these investment opportunities and stable returns guaranteed.
And in terms of investor appetite, Kai, what are you seeing there?
Well, actually, acquiring for Domicil residential real estate in Germany is quite hard because there are a lot of investors who are focusing on residential investments in Germany, not only the German insurance companies and pension funds, like the two that are shareholders of our company as well. But there are also other investors who have a very big appetite for residential and who really look for the stability that the residential market in Germany brings. So the demand is quite high. There are a lot of institutional investors also investing, and the supply is quite low. Actually, the only areas where you do have a real market is in the development market. So for example, for PFA, we do acquire project developments as forward deals in Germany, which is a very profitable investment. But still, there are a lot of investors who are keen on this product. So we stand in the competition, and we try to manage it and get best product for our clients.
Germany and residential, both very popular with investors at the moment. So great to get your insights on the market. Thanks very much for joining us, Kai.
Thank you very much for having me.